Alright, so welcome to my video on how to invest in and research startup companies. I call it do-it-yourself angel investing. And I put this together because there just really was not a lot of information about this topic on the internet. Um, and hopefully this is useful to you. If it is, please leave comments in the comment section, and maybe I'll put together a few more videos about this topic. First, a disclaimer, I'm not a professional. I don't pretend to be one. Startup investing for non-accredited investors, it's new and unproven. It's only about a year old. Startup investing is risky. You'll lose at least some of your money. There are currently no public markets, so unlike the stock market, when you're trying to unload a stock, you can get rid of it in seconds. Here, your money is probably going to be tied up for years. And this represents my self-taught knowledge on these topics, and those are ever evolving as this industry evolves. Hopefully I'll be able to put together a few more videos on it. In terms of the outline of this video, what I really like to do is sort of go over this PowerPoint to give you some basic ideas, and then move into 3 examples of startups that I've invested in, and why I've invested in them, and what kind of research that I've done. So in terms of the agenda, I want to first talk about the recent opportunities that have opened up to this new law allowing non-accredited investors to invest in startups. I want to talk about the 2 different types of investors. I want to talk about the different websites that are available for non-accredited investors. I want to talk about the types of investments that are possible, how to research your startup. That's obviously a very important topic. And then last but not least, how to go about investing. So all of this came about by the Jobs Act that was signed into law in 2012. It allowed for Regulation F, crowdfunding, crowdfunding for non-accredited investors, and it allowed non-accredited investors to invest limited to the greater of $2,000 per year or 5% of your earnings if you make less than $100,000, or 10% of your income if you were earning more than $100,000. Regulation crowdfunding went into effect on May 16th, 2016, so it's really only been around for a short time. What's an accredited investor? Well, if you have to ask, you're probably not an accredited investor. Means you earn more than $200,000 if you're single, or $300,000 if you're married. Means that your net worth is at least $1 million, which excludes the value of your primary residence, your house. That's the accredited investors, and that's really the only people that were allowed to invest in startups prior to this law. The rest of us, non-accredited investors, we were kind of shut out of this market, but due to this new law, it is possible for us to partake in this. What are some websites that accept non-accredited investors? And I know of these 5. There's probably more. I think these are the largest ones. If there is more, go ahead, leave some feedback in the comments, and what your experience is with them. The ones I'm aware of is MicroVentures, wefunder, StartEngine, SeedInvest, and Republic. Now, how do you research a startup that you're interested in investing in? So here's a couple of things that you should consider. Number 1, what type of a company is it? Is it an LLC, Limited Liability Corp? Is it an Inc., Incorporated? Is it an SPC? And SPCs are only a few years old, and they're essentially companies that are socially responsible companies. So they don't only look at shareholder value, they look at stakeholder value. For LLCs, those could complicated. Those are flow-through entities, so you may end up with some additional tax statements at the end of the year. You should, contact your tax advisor for that. What are the types of investments that you can that these companies offer? One that's very popular is a safe or a crowd note, and what those are essentially contracts that are assigned to you that at a point in the future when equity is issued, you'll receive equity at those specified terms. So companies tend to like it because it kind of stays off the capitalization tables. They're very simple. You don't need a lawyer. Very simple to implement, and I'll show you some examples of that later. There's stock, which is very similar to the stock you buy on the exchange, except that it's much more illiquid, but the same kind of concept. There are convertibles that are also very popular, and that's essentially a debt instrument that in the future can convert into equity. It usually carries interest. And then I have also seen one or two companies that were interest only. So it was more of a debt instrument. The last concept here is the valuation cap. A valuation cap is one of the more important concepts. And the valuation cap is basically the maximum amount that your equity instrument sort of converts into. If it's a safe, it essentially means that if your company at some point in the future is worth more than the valuation cap, that's when you've made money. So as an example of the valuation cap is 5 million, and the next round of equity financing is at a cap of 10 million, you essentially have doubled the value of your investment. We'll go over that in some of the examples. What else is important? The founders are very important because you're not really buying an operating history here. There's very little of it, so you're kind of investing in an idea. You're really investing in the founder. So make sure you check their LinkedIn and what kind of history they have in being entrepreneurs. Have they done any product crowdfunding? That's usually very good, an indication of sort of how much legwork they have done, how good the product is. There's usually investor decks on the website that you can go through that sort of lay out what the company's plans are. There's the financials that you can go through. There's always a link to the SEC Form C, and don't skip that one. That sort of agglomerates all the information that is important. There's the instrument document, so the instrument that you're actually investing in. It's good to know what the dynamics of that are. Product research is very important. Make sure you do, kind of figure out the plausibility of the product that this company is selling. Minimum investment, of course, very important, as we'll go into. Try to diversify. So if the minimum investment is $5,000 and $5,000 is all you have, invest for startups overall. Maybe you're better off looking for investments at a much lower minimum investment. A lot of companies will offer investment perks. So if that's of interest, that could be another incentive for you to invest. In terms of the business idea, right, you have to vet that. What is the audience? What is the market potential? What's the competition? What kind of substitutes are there? Is there a networking effect? Sort of what we see in the internet sector, in one company sort of will own the space. We have that in Amazon for shopping, in eBay for auctions, in Uber for ride sharing, and so on. And also, who are the buyers, who are the suppliers, and where do they fit into all of this? Very important. A lot of spelling mistakes here. I'm very sorry. I just put this together. I wanted to get it out. So diversification is very important here. If you invest in one company and it goes bankrupt, you just lost 100%. However, if you invest in 50 companies and each one has a chance of going bankrupt at 50%, the chance of all 50 of them going bankrupt is virtually non-existent. If you do the math, it would be 2 to the 50th power inverted, which is comes out to be a decimal point that's about 15 spaces out, 15 zeros out. What else to remember is your investment is going to be illiquid. Plan on leaving your money in for a long time. And what kind of returns do we see? Well, it's obviously tough to say, but if we look at the Pepperdine surveys, they have estimates of required rates of return. And those for angel investors range from 20 to 35% versus for venture capital, it ranges from 23 to 38%. How do you invest? Usually you put kind of an indication of interest, a reserve in, and then at some point there is going to be a last chance before it goes final. That usually gives you about 48 hours to cancel. After that, it becomes final, and then it usually takes a few weeks of waiting till you get your final documents. So that kind of sums up the introduction, and we'll go look at a few examples of what I've personally invested in, really only as an example of what you should look for, because it is a little complicated when you get started into this to kind of figure out exactly what's going on. So the first company is PlantSnap. And a lot of this crowd investing has really a social aspect to it. So, right, there's the financial, the investment aspect, the kind of logical part, but then there's also the social aspect. So maybe you see a company that you sort of really believe in the product, or you believe that it should be a product that will exist, and so you're wanting to invest in that. And that's sort of what PlantSnap. One of the reasons I invested in PlantSnap, because I really like the idea, and it's a product that I personally would like to have. And so PlantSnap is basically an app that allows you to identify plants. You just take a picture of them. There's an algorithm, and it's supposed to spit you out the name of the plant. Anyhow, here's some of the things that were important to me when I looked at this company. So we have 271 investors raising almost $100,000. So that gives you an indication of where they're at in the fundraising, how many people have thought this was a good investment or excited about the product. All these companies will charge fees. They'll usually charge the company a fee, and they'll charge you a fee to invest. So those fees are fairly high. So as an example, $100 here would be a $7 fee. So 7%, it's pretty high. It scales in the beginning, so it actually doesn't change until $350, and then after that, for example, 400 would be $8 fee, and then 500 $10 fee. So it does sort of is very heavy at the low end in terms of fees. So that you have to keep in mind. As we discussed earlier, what you're actually buying is a safe. So in the future, when this converts into equity, if there is a triggering event, what will happen? It'll be converted at these amounts. So the cap is $5 million. So if the next event is at $10 million, if the equity conversion event or the equity event is at $10 million, you will get your investment valued at $5 million. So essentially, it's almost a 100% return. What happens if it's less than that? You'll get a 20% discount. So let's say the future rounds or equities issued at $3 million, so that's less than $5 million. So the $5 million cap isn't going to get triggered. But what happens is instead of 3 million, you'll invest at a 20% discount to that. Your money will be invested in that. So that'll give you a little bit of protection in case those future rounds are less. Oops. All right, so we also have some investor perks. We have a PlanSnap t-shirt and premium app. So that's part of the package. And then it sort of gives you an overview, gives you some press articles to read through. Those are always interesting. Gives you the basic overview of what this company does, which is basically this app that identifies plants and gives you background information on them. Gives you a little bit of background on how to use it. Gives you the investor deck. What does the company plan on doing with your money? The timeline, you know, where have we come from? Where are we going? That's always interesting to see. What are the plans? And the founder, again, you're really investing in the founder, so make sure you look up the LinkedIn and what he does. Who else has invested? Some more detailed information that has been answered. And at the very end here, we sort of have questions that you can ask where the founders will respond to. And let's also go to the, all the way at the bottom here, you will see Form C. Let me open that up to see if it's available here. So definitely go through that. I'm just going to open all of these up to give you an idea what the documents are that have been filed with the SEC. All right, so this is Form C, the official form with the SEC. It'll give you an overview. It's a corporation, the website, various filing numbers. It'll tell you right here it's a simple agreement for future equity. Give you the current number of employees. It'll tell you the assets, offering statement. Again, who are the directors, officers of the company? It's all one person here. Who owns the common stock? Who is it owned by? 88% by Eric Rawls. Sort of a basic description. The offering, what happens when they raise a certain amount. So that's important, right? What are the plans with the investor money? Do those make sense? And ownership and capital structure. Again, this reiterates the safe and the valuation cap and the discounts. What else? What securities have been issued? Just going to scroll through this. So you should definitely kind of read through all this information. For example, here, this section here talks about equity that has been added in the past, and so like in 2016, we had a few of them. Some convertible notes issued at a 1 million valuation cap. Then some additional ones, larger amounts, were then issued at a 2.5 million valuation cap. And this particular SAFE was now issued at 5, so from 1 to 2.5 to 5. So that's good information to have. And it has the the information. So it's always good to know like what stock has been issued, what instruments have been issued to other people in the past. All right, trying to see what else. Ongoing reporting and appendices. That's probably good for Form C as an overview. Then this is all on the SEC website. So this is just a snapshot of the portal page that we basically looked at. This is a profit and loss statement. These are, of course, all startup companies, so the financial statements are usually not too pretty here. We've got, loss of $60,000. We also have the asset balance sheet, or balance sheet. Got a profit and loss, but I think we've just seen uploaded again. Audited financials, or unaudited financial, I should say. There's certain rules to which needs to be audited, which needs to be unaudited, depending on the size. So have a look at those to see where the money's going, where it's coming from, especially if the company has some operations. This is the LinkedIn profile of the founder. And the last page here is the business plan. All right, so that was sort of my overview on PlanSnap. Next one is a company I invested in, which is Saunders Electric Cars, and this one is a little different because here you're really investing completely in the founder, right? Saunders, if you know his history, he's the one that started the electric bikes. It was very popular, and here you're basically investing in him. There's really not much in terms of operation, and it's just really him and his plan, and that's sort of where you're heading to. So here we got over 1,600 investors. They happen to raise the maximum of $1 million. Now, actually, part of it has been, I think the initial tranche of money was being used for development, and now that part of that development has been sort of done, he's actually looking to raise an additional $20 million for accredited investors only. Right, so we're not part of this game. I did check on this, and interestingly, this first tranche was at $12 per share, and this second tranche now, a couple of months later, I think is at 20-something dollars. So that's kind of interesting to see what the increase was. So again, here it sort of gives you a background, what the plan is with Saunders. What are you actually investing in? Well, it's $12 per share. It's a $10 minimum, so I mean a 10 share minimum, so it would be $120. And the valuation cap in essence is $33 million. So you're essentially betting that this company is going to be worth more than $33 million, which is pretty risky because there's not much there with this company except for the founder, right? So you're putting sort of a high tag on his sort of entrepreneurship. Let's see, sort of give you some basic facts, right? He's looking to build a electric car at a $10,000 retail price, and it gives you some of the specifics that we're looking at, what they're looking at. Gives you some modeling, gives you background on the electric car. Gives you a timeline, lots of press articles, the founder, which is really what you're investing in here. Offering summary, right? Looking at essentially 83,000 shares at $12 each. That's what he sold, which increased the stocks outstanding from 2.7 million to 2.783 million. There are some additional things you should go through. The balance, again, as we've discussed, balance sheet, income statement, cash flow, business plan, related party transactions, and Form C, which is definitely of interest. Let's open up some of these. For Saunders, description. Just to give you a quick overview, and we'll jump to the Form C in a second. All right, let's start off with the financial statements. Again, balance sheet, not much here. Cash flow, nothing here. Statement of operations, nothing here. Revenues, operating expenses, absolutely nothing. So you're really investing in the founder. This gives you kind of a business overview. Kind of very short, again. Related party transactions, we didn't have any. Use of the proceeds. If you raise the minimum versus the maximum, what is the money going to be spent on? So that's important. Who are the directors, officers, and so on, which is basically the Storm Saunders. Again, he owns all the stock. Financial condition, background of the officers, financial statements, the offer circular, which is essentially similar to Form C, but this is sort of tells you what's being offered again, which is 83,000 shares at $12 a share. Tells you, again, the capital structure, tells you the risks, right? The risks of investment, what they're going to do with the proceeds, so a lot of things we've already discussed. So definitely worth going through. And this is actually the I guess, Delaware form of incorporation. So let's take a quick look at Form C. Filings, so definitely always go to that. Just open it up. Let me go ahead and go down, and basically the rest of this is because this has already gone. These have already been sold, so these are kind of the updates that the company has done on building the model and so on. So a lot of companies will give you updates on how they're progressing with their plans, which is a ton of information here of where they're going and what they're doing, and comments at the bottom. Here's the SEC form. Again, this is Form C for the first investment. We got the campaign page, materials, and start engine basics. All right, so let's go ahead. We're waiting for this information to load. Taking a little bit of time. But the Saunders campaign page will basically what we just went through. So even here, they're going to give you kind of a copy what's been posted online. I guess sort of as a record of that. Let me check. This is still loading. and also step through on how to do a Edgar SEC search, because the next company, actually the links were broken, and so sometimes it's difficult to kind of track down that SEC information, particularly when the company uses a different name. So sometimes um, the funding will be, by the product or kind of a sub company, but then you'd have to search by the main company's name in order to get to the SEC materials. All right, almost there. Okay, here we go. So this is essentially what we've looked at, a copy of the offering page, memorialized on the SEC page. And this, we don't need to wait for it. It's basically a lot of the same, the Form C, the offering memorandum that we've looked at. All right, so let's go ahead and move on to the third company. StartEngine. Which is LensSnap seedinvest. All right, so LensSnap is basically a software company that's trying to come up with a better way of people to go through the mortgage collection, the document collection process. And if you ever had a mortgage, you know it's a hassle to get all the documents, send them in, this is missing, that is missing, ends up being, taking a month just to get the proper documentation. So this company is trying to sort of be more efficient. And I did invest in this company also, and here are some things that I thought were important. The minimum is 500, although if you go through the auto investment process, it's 200. So that's what I did. The valuation cap is 6 million. So again, if the company ends up being, it needs to be worth more than that for you to make your money. And what you're investing in is a crowd node, which is similar to a safe. This is a round size of 2 million because this is actually a dual listing, so it's for accredited and unaccredited investors, and they're sort of offering both, because usually the crowdfunding is limited to 1 million. It's seed investing. Let's see what else. It's a side-by-side offering, which I'll show you down here. Once we get there, first there'll be an overview. It tells you what the problem is in the mortgage industry with the data collection. What are the products that are going to help to solve that problem? Media mentions the founder. So here we have two founders, and looking through it, we've got sort of a tech guy, and we've got sort of the business guy with the experience in the loan market. So that's usually a good combination. We've got other key members, other investors and advisors, which is good. Q&A with the founder. Side-by-side term sheet, right? So we've got accredited investors here and non-accredited investors here. Pretty much the same sort of details, except for the minimum investment. It's 20,000 for accredited, or under regulation crowdfunding. If you're accredited, you can always invest as a non-accredited at only 500. So basically, this will give you an opportunity to invest a larger amount if you're accredited. You got financial conditions and market landscape, some disclosures. These are from the Form 10C, and general risks. Let me go ahead. The Form C actually I think was mislinked, so we'll have to go in I'll show you how to pull that up. Also, the data room here is interesting. Unfortunately, these are not working, probably because it's an old listing. But I'll go ahead and show you how to pull this information up from the SEC. You go to sec.gov, go to company filings, company name, simply put in the name. Like I mentioned earlier, sometimes it's a doing as business name, so you'd have to find out who the company is behind it. This is Form C. And let me go ahead and pull these up. Hopefully that won't take too long. All right, so this is Form C, Lens Snap. You just go through it real quick. This one has a due diligence done by CrowdCheck, so they are sort of, I don't know how you would say it, a sort of approval, I guess, from them that this is a legitimate startup looking to raise money. You can Google that, get more information about them. We've got the officers, related party, transaction, the risk factors, right? Those are always prominent. What are the risks that you take when you invest in this company? Details about the offering, classes of securities. We've kind of discussed it. So again, this gives you a history of what's been issued, what discount. So this is some of these have 20% discounts. I think this one is a $5 million cap, a $6 million cap. So it's important to go through and see sort of what's been issued in the past. So that's your Form C. I think we've highlighted that on all the other ones, so definitely don't skip that one. These are the financial statements again. So take a look at these. There's a little bit more in terms of operations here, but again, with these startups, you're not going to see a large history or a lot of profits. Otherwise, they wouldn't be raising money. This is the profile again. So the profiles tend to be, all of them tend to be listed on the SEC. This is the investor deck. And again, this is the crowd note. So the important terms here, valuation cap of $6 million, the discount, and this also carries an interest rate. Let's see, that is really it for this presentation. I don't know, I hope it's been useful. If it has, leave me a comment, and we'd be happy to do a few more of these. Or if you have any feedback, feel free to leave me some down at the comments.